Yo, what's going on, everybody? Brand new video, and I'm going to be going over what I use for my technical analysis, how I come about a bias, and how I attack it forward, right? So in this video, you're going to be able to see the indicators that I use, that I put together to create my bias, and basically my entire technical analysis, right? What goes into my technical analysis, and we're going to do a slight breakdown on GBP JPY. So this video will actually be active to look for a trade tonight. That's why you have to turn on my post notifications on, so make sure you do that. Like, comment, subscribe, and get into the video. So in my technical analysis, right, let me get rid of that. If you guys play FIFA, you guys know what that is. When you're looking at technical analysis, right, I actually use very little indicators, right? I maybe use, I would say, two, barely, right? I use one big one for a bulk of my analysis, and then I use one on certain occasions, right? When I kind of just want to, test it out, see how it looks, if I could add it into my line of confluences, right? But at the end of the day, for those of you who have been following me for a while, I trade based on confluences. Confluences to me are basically just pieces of the puzzle, right? And the puzzle every single night or in the morning, if you guys are trading New York session or London, wherever, it doesn't really matter. What you should be coming to is a conclusion of the market, right? Where you're going to go, where do you think the market's going to go? So confluences are pieces of that puzzle, right? And they're going to be little things that you add up to get to where you want to be at, right? So you know where the market's going to potentially go. So if you see my chart right now, you're gonna see that I have one thing already, right? And this isn't an indicator, but this is a part of my technical analysis, right? And this is support and resistances, right? Support and resistances, I'm gonna make it real clear because assuming a lot of you guys know what that is, are just areas where price rejects a lot, right? Where you can see price reject. You can see that there's an area in the market right here that price has a tough time breaking through or breaking under. You can see right here, we rejected this level strongly, and we ended up going down for a huge move all the way to the downside that resulted in about 300 pips right here, right? And you can see that once price rejected this supply and demand area, right, a form of support and resistance, price flew all the way up for 385 pips. So between these levels, these have to be accurate so you guys are able to capitalize and catch these moves, right? You can see that price has an area where this area of support and resistance is backed up by multiple points, right? There's 4 points right here, right? There's 4 points right here, and you can see that price reacts to this level harshly, right? You can see that we either drop or we go up. So right now, if we see price hit that level, I could probably take a nice bet, or not bet, that's just one confluence of many, that the market will probably reverse here at least, to this level, and then potentially go down to a lower level. I know that was a long explanation on support and resistances, but this is going to be a quick video, right? Just boom, boom, bam, not going to make anything a little bit too difficult. Another thing I use that is universally used between all traders, I believe, is the trend line. You can see right here that I have added a trend line. Let's get rid of this area of support and resistance, and let's just look at the trend line, right? You can see that price is currently in a bullish state, right? Price is pushing bullishly, higher highs and higher lows, but we see price break under that trend line, right? What does price do? Price perfectly comes up, pulls back to that trend line, retests it, acts as a level of support and resistance, and you have the support and resistance side drawn on here, and those are two confluences, for example, as to why you could have gone short and price actually takes a nice drop. We actually took this trade last week, where I will be breaking it down and dropping tomorrow, Wednesday or Thursday, and it dropped 153 pips. So the trend line kind of tells me if we're in a buy zone or in a sell zone, right? And in this instance, we're in a buy zone, and once we broke through it, we're gonna go look for sales. Another moving average that a lot of people kind of have a difficulty time using, and I definitely did. I definitely needed a lot of years of experience, and that was just simple moving average, right? Paired up with the 50 moving average. What this does is kind of tell you the overall trend of the market, right? But again, it's a little subjective because it's different time frames are going to give you different movements of the SMAs, right? And you can see right here on a higher time frame that price is actually starting to trade under that 50 moving average, right? Comes up, retests, rejects. So you can kind of look for shorts every single time you're looking for price to hit that moving average, right? And then when you're on top of it, we can start to go long, right? So we break right here, we come down, retest, and long. But where I love to also use the moving averages, which I also teach in the academy, is how to use it for entries, right? You can see that price is going to move with moving averages in a certain way that we have, came to understand and learn, and that's what I actually use for entries. I love using the moving averages. If I have moving averages and confluence, to me, those trades are such high probability. So I did mention that I use maybe another indicator, right? A real indicator. The moving averages is considered a real indicator. The other ones are just considered technicals, right? So I actually have it on a separate chart, and why is because I don't always use it, but when I do, I like to see it, right? And that's the RSI, right? The RSI is going to kind of tell you if prices in the overbought, oversold market, underbought, oversold, whatever. And you can start to see also something called divergences in the market, where in the market you get different things according to this RSI, right? And that's how I mainly use it. Not when we're overbought, not when we're oversold, when you have divergences in the market. So for example, you can see, okay, so it took a while for me to try to find one, but I'm going to show you a perfect bearish divergence, right? You have two different types of divergences, right? You have bearish and you have bullish, right? And basically what I'm looking for is a difference in the market, right? So you can see right here, right? You can see right here, I'm going to take this and mark off this high, right? We're going to mark off this high. It's going to pull back and create a new high, right? Okay, we're going to mark off both these highs, right? You can see that the market is going up like that, right? Like that, right? We're going to take this high, we're going to go down, and we're going to mark it, which is this little point right here, right? We're going to take this high, and we're going to come down, and we're going to mark it. But guess what? You see, we're going to mark this level, we're going to mark this level. But what do we have? We actually have that RSI telling us that we have bearish divergence, right? So on here, on the chart, we could see that we were bullish, right? But we're starting to get a very heavy divergence where the RSI is telling you something different. We have a channel going downwards. So you could potentially look to sell soon, right? Based on other confluences, and price actually eventually does sell off for a couple of pips. Now that's a little divergence, right? That didn't result in a big move. It did result into a 130 pip drop, right? So, you can take it for that, right? But again, you can use RSI and divergences in many different ways. Now, the final thing that I do trade with, right? I do put all these technicals together, right? If you were to have all of them on at the same time, it would look something like this, right? Or, maybe I don't have the RSI on this chart, but you just see a little bar down here, right? Where the RSI is at, you can see right here. You would see this down here. But, every single time we don't always have these confluences, but the more confluences we have in a trade, the better and higher probable that trade is to go our way. Now, I do trade one more thing, and that's actually certain types of patterns, right? Head and shoulders, inverted head and shoulders. We trade ascending and descending channels, which are very rare. Not head and shoulders; those are common. But those channels, they're a little more rare for sure. And double tops and double bottoms, right? So I'm not gonna explain that in this video. I'm gonna drop a whole nother video. If you guys are interested in watching that, literally comment which one, head and shoulders, double bottom. If you guys want to see a full breakdown on how I use it. And yeah, so it's going to be the end of this video on how I kind of come about my technical analysis, what I use as indicators. And actually on GBP/JPY, I'm also going to expect price to do one of two things. We're either going to start trading under the support and resistance, break under and drop, or we're going to react to this area of support and resistance. We're going to reject this moving average as a confluence, and we can continue to go long, right? So just a quick little breakdown. Hope you guys enjoyed this video. I'll see you guys in the next one. Deuces, like, comment, subscribe.